Good morning, good afternoon, good evening. You are watching the Paris Fintech Forum Communities video interview series. I'm Elliott Gotkine, and today I'm joined by the co-founder and CEO of Atom Bank, Mark Mullen. Great to have you with us.
Great to be here, thanks.
Okay, so before we get cracking, let's learn a little bit more about Atom Bank. Now, at this point, I usually ask guests what their company does, but I think it's fair to say that Atom Bank does what it says on the tin to a degree, as we say. So maybe you could just tell us perhaps how you differ from other, let's call them neobanks.
Of course. So I guess the principal way in which we differ is we focus our strategy on lending. And so we are here to serve people who want to own their own homes, buy their own businesses, or save to do it. And so we offer mortgages, we offer commercial mortgages, and we offer savings products, whereas lots of other platforms really are focused on transactions.
Okay, and I suppose another difference is that you are an exclusively UK retail bank. Do you have any plans to add other markets, or did Brexit maybe put paid to that?
Oh, I don't think Brexit put paid to it. So I think it's certainly an option for the future. But right now, we're still a very small bank in actually a very substantial, very big market. So we've still got plenty of work to do to become bigger, I guess, in the UK.
Okay, and I think in February you raised more than £75 million in a round led by Spain's BBVA, reportedly valuing Atom Bank at £435 million, I think it was. That's still a fraction of Revolut's and even Monzo's valuation. Do you think that's fair, given that you're actually profitable?
Well, it's a private company, so the valuation, as much as anything else, has never been tested, I guess, in a public context or in public markets. So I tend not to worry a huge amount about, if you like, private valuations, because I'm not sure that it really gives an indication of true value once you've, as I said, put it to the sword and put it to the test. I'd like to think there's a lot more growth potential and a lot more value potential in Atom than is currently been reflected in the, as you say, the valuation that we've just reported.
And I guess putting it to the test, I think, is something I read is on the agenda for next year, I think it was. Where do you stand in terms of your plans for an IPO, for initial public offering?
Yeah, we've talked about looking at an event in 2023, and that remains very much our focus. So I guess my job is to make sure that we run the business so that it's possible, but it's a pretty turbulent world. And so, you've got to make sure that if it doesn't happen, then it doesn't cause you a crisis. Right now, we're focused on an event in 2023. More specific than that, I don't want to be.
And I mentioned BBVA leading your last fundraising round. You've kind of had a long love affair with the Spanish bank, if we can call it that way. Do you consider yourself as a partner to BBVA, perhaps a subsidiary, or do you think you'll always be, for want of continuing the metaphor, sleeping in separate beds?
That's a great metaphor. I think we're probably sleeping in separate beds. They've been fantastic supporters and investors in Atom, and they're very well represented on our board. But by the same token, they treat us as they would, I guess, any other equity investment. And we've also been supported by other important shareholders. So Tosca Fund, for example, are almost as big a shareholder in Atom as BBVA. Separate beds is probably the best way to describe it.
And just, what is the overall mission here? Is it to build the kind of, Lloyd's Bank for the 21st century in terms of UK retail bank?
We think that there's an opportunity to change the fundamental paradigm of how efficient banks should be. Our thesis is essentially to conclude that banks are enormously inefficient, cumbersome engines, and that if you focus on smaller parts of the banking market, arguably the most profitable parts of the banking market, you can create a transformative difference in how well they perform. And that can only benefit customers or benefit investors. So what does that look like? Does it mean we're bigger than Lloyd's? I don't get to decide that. But I certainly want to build a machine that has the potential to be bigger than Lloyd's. Absolutely.
Okay. So we've heard about Atom Bank. Let's now get to know Mark a little better. Okay, so Mark, I understand Atom Bank is based in Durham. You're in kind of North Yorkshire, also in the north of England, but you're, I believe, an Irishman by birth, and I'm not sure that banking was necessarily in the veins from the start. So tell us a bit more about yourself personally.
Yes, I'm something of a nomad actually. I was born in London and then grew up, was educated in Ireland, and then spent part of my childhood living in the Middle East. And then ultimately went back to university in Dublin in Trinity College and left to join Midland Bank Group in the late 80s, early 90s. So I've been all over, I guess, a bit.
And was banking something that your, I guess, family thought that you ought to go into? Was it something you thought that you were destined to get into?
No, I'm an accidental banker, but most of the people I meet are accidental bankers. If you ask a bunch of people in school, what they want to be when they grow up, very few people are going to volunteer to tell you that they dream about being a banker. I mean, can you imagine it? It's not really an industry or a profession that's associated with vocation. So I joined a bank because I needed a job. Primarily, I had a very large student debt, and I preferred it as an option beyond, becoming an accountant, which was my other choice at the time. So it's purely accidental, serendipitous.
And you mentioned that you studied at Trinity College. I think you studied history, if I'm not mistaken, and then you did your MBA about 10 years later. And then you spent a lot of your career, I think most of your career, at Midland Bank, which became, HSBC, and then also First Direct, part of HSBC. When did you kind of think or realize that, what, I could do this, I could run a bank? When did that kind of light bulb go off in your head?
In part, it came to fruition because I met Anthony Thompson, who was one of the co-founders of the bank, and I met him at a party, purely coincidentally, at a mutual friend's party, and we started to talk about the feasibility or likelihood of going out and starting a bank. But it owes its origins, at least for me, to the difficulty of trying to get anything material or meaningful done. And so it turns out that in some ways it was easier to go and found a completely new bank, a completely new business, than it was to build a business case to transform the one I was running prior to it. And that's just part of the mechanics of working in big groups. It's challenging, it's difficult. The priorities don't necessarily focus on what you want to do. And so you end up with a choice about whether you're going to serve time or whether you're going to pursue, something you really truly believe in. And I chose the latter.
And I'm curious to know, because a lot of the fintechs we speak to here and at the Paris Fintech Forum, the founders will say that they came up with some idea that they knew was solving something that hadn't been solved before, or was something truly original. What was your sales pitch to investors? What was it easy to persuade them? Hey, look, I want to create a bank and take on HSBC and Royal Bank of Scotland and Lloyd's Bank and all these other guys. That must be a bit of a harder sell.
Well, listen, people buy people and they buy plans, but it starts with people. So if they don't think that you're credible sitting opposite them, then frankly, it doesn't matter. Nothing else really matters. It's not so incredible as it might sound now. If you believe, as was the case, 10 years ago, that consumer behavior was migrating exponentially in favor of mobile devices, then there is an inevitability that you're going to see a transition or possibly even a revolution in banking and financial services. So the only real question becomes one of how fast and how big. So how many use cases will it encompass and how many people will adopt, et cetera, et cetera. So the principle is actually pretty straightforward, that the minute you buy the idea that the consumer is going to migrate their behaviors onto these devices, then there's an opportunity to disrupt not just banking, but frankly, every other industry on the planet. And we've seen that happen progressively in the sort of 7 years that Atom has been in existence. It's probably not happened as quickly as everyone thought. That's the general sort of view of banking. But there is an inexorability about it, that banks are very, very, even today, very tortuously trying to adapt their business models to a set of technologies that were not in existence barely a decade ago.
And briefly if you can, what's been your best day and your worst day on the job since you founded Atom Bank?
Oh, listen, the best days are when you launch something and it works, or whether when you close a capital raise. And the worst days are when you don't close a capital raise, or you think you've done it, but something comes up. And so the difference between triumph and disaster in building businesses is very marginal. And I think anyone listening to this who's built their own business will know that on Monday you can be, victorious, and on Tuesday you can be in the pits. And that's been a repeated story with Atom.
Okay. Well, one imagines those kind of triumphs and disasters kind of both come thick and fast in the course of running a startup or a fintech. But look, a key part of this interview, Mark, is to get your take on the future of finance. But first, we are going to take a very quick break, after which we're going to continue our conversation with Atom Bank co-founder and CEO, Mark Mullen. Welcome back, and don't forget, if you're not already a full member of our community, everything you need to join can be found at www.parisfintechforum.com. Okay, Mark, now I just want to talk with you about the future of finance. We talked briefly just before about the planned IPO for next year, or at least the intention, but I guess obviously it depends, I think you said, about the performance both of Atom Bank and the wider economy. Given the falls that we saw on financial markets at the start of 2022 and the Russian invasion of Ukraine, do you think that's still likely to happen? Does that affect your plans at all, or is that just still too far out to kind of really know?
I think it affects different aspects of our plans. So at a very mechanical level, it affects our risk appetite, our projections about how customers will be able to cope over the next months and years, what the outlook for growth in a given economy is, what the inflation rates will be, what the interest rates will be. So it's important to recognize that there are aspects of our business model that are not immune to that turbulence. But the fundamental strategy, the fundamental belief system that drives our business is pretty stable. Will people still want to borrow money to buy houses? Yes. Are there enough houses? No. Will people want to build businesses? Yes. Will people need to save in order to be able to make those investment decisions? Yes. Will the banking leverage model still have application? Will it still be a powerful construct? Yes. Will people still want to use mobile devices and technologies to access and manage their money and their data? Yes. And so those, I think, are very long-term, pretty stable phenomena, but the turbulence matters.
Right, and perhaps it matters even more for some of the other neobanks, some of whom were planning their IPOs for 2022. Do you think they're going to have to kind of rethink their plans?
I think there's a general observation I would make. It would apply to Atom as it would apply to anyone. These things take longer to build than people hope or believe they will. That if you're patient, I think you can achieve scale, you can achieve profitability. If you're not, then you're fishing in an industry here, or in a pool where some of the companies that you're competing against are 250 years old. So it's unreasonable to think that in the space of 1 year, your future should be determined to be successful or failure. I think you've got to be able to plan over a 3-5 year cycle. And so I wouldn't read too much into a delay. I don't think it's necessarily fatal.
Right. And as we mentioned before, Atom Bank is focused, certainly for now, on the UK, which is a big difference with pretty much all the other neobanks, whether it's N26, Revolut, and even Starling, which is expanding. Why did you choose to focus on the UK first rather than kind of spread yourself out and kind of, have this kind of land grab as quickly as you could?
Well, I think it's a very different business model that we've created at Atom if you compare it with ourselves and Revolut, or indeed ourselves and Monzo. we're focused on what might be described as the heart of banking. The heart of banking is essentially maturity transformation, it's leverage, it's lending, and it's deposit taking. Whereas other business models are focused more on FX, they're focused more on transactions, they're focused more on debit and credit cards, as it were, or their equivalents. The reason we do that is because actually, if you peel away all the layers of how banks work and how banks and financial services companies make money, you discover an uncomfortable truth, which is the vast majority of money that they make by lending. They don't make it on transactional fees. They don't make it on interchange. They actually make it on good old interest income. And within that, the lion's share of that interest income is absorbed by lending for mortgages. So the simple answer to your question, which is why are we focused on the UK, it's because it's a multi-trillion pound opportunity. And it's because it's the absolute heartland of retail banking profitability. And we think if we can create a successful business model in the UK, it's exportable. But first and foremost, you've got to create a successful business model in the UK. And given that we've just achieved operating profit, we've still got a way to go to lock that down.
Okay. And again, many other neobanks and fintechs have kind of gone down or embraced the super app model, if you like. Revolut, Lydia, and others like them. Do you believe in the super app model? Do you think this is a good model to have, something perhaps you might consider embracing further down the line?
Well, it's unproven. So it's an intriguing, interesting, potentially very powerful, transformative model, but it doesn't exist. Yeah, I think it's a goal, it's an objective, it's an aspiration for lots of different businesses. My observation about the emergence, if you like, of the platform or transactional banking model, the super app model, is it looks spookily familiar to the model that exists today. In other words, we have these big banks, they have current accounts. You open a current account, inertia means you stay with that current account provider, and over time, the bank will flog you more stuff. Somebody needs to explain to me how that's fundamentally different from a platform, which is, you open a transactional bank account, you stick with them because they, to be fair, offer you a better experience, and then over time, they'll monetize that relationship by, flogging you more stuff. It seems like an awful lot of money to go and recreate what we already have. And so, maybe you can do it on a bigger scale, but I'm not convinced that it's actually moving the industry forward much.
Okay. So, look, we talked a bit about BBVA being obviously a very big investor in Atom Bank, but we have seen partnerships between big institutions and fintechs. They don't always work out. For example, Holvi and Simple disappeared after being bought by BBVA. Fidor disappeared after being bought by BPCE. So do you think banks only make for good partners with fintechs, or can kind of some kind of full integration, maybe being as a subsidiary or what have you, can that work too?
It's a really interesting question. So when I was the chief executive of First Direct, I had the great privilege of leading what was, in my view, a truly world-class business and a wonderful little brand. But in the context of its owner, it was tiny. And therefore, it had a uniqueness and a special quality that was difficult to sustain and maintain in the context of having this enormous group with this mega brand surrounding you. And it's been my experience that the trend towards brand consolidation amongst big banking groups is, pretty unidirectional. They tend not to be able to manage multi-brand portfolios terribly well. And they can't resist the synergies that are associated with absorption. The trouble is that when they absorb little brands, or even when they spin them out and create new ones, they often kill the magic that made them one possible in the first place and two different and special. So I'm not a big fan of big banks buying little banks or little brands or challenger brands. I think it's almost irresistible that they squash them, they stifle them, they smother them. I think there are maybe one or two enlightened companies that know that true multi-brand strategies actually require separation.
Okay. Now, I mean, you said before that at the moment you are relatively small as a bank in the UK. So I guess you don't worry yourself too much about Russian oligarchs squirreling away their potentially ill-gotten gains into Atom Bank. But do tensions, US and EU sanctions, be they on Russia, on Iran, or whatever, does that make life tougher for you as the CEO of a bank?
It doesn't, I think, is the answer. So we don't have a special set of regulations or rules for one set of oligarchs or one set of rich people or nefarious people than another. We have to adhere to the PEPs, sanction screening, money launderings, its checks. We've always had to do that. We've always done a pretty good job of it, and we've always been incredibly vigilant about it. So it's the reality of banking in the modern world. And I think it's going to become more intense, not less intense, for a whole bunch of very obvious reasons. But we've always lived in that regime, and we just have to continue to live in that regime and make sure that we don't take our eye off the proverbial ball.
Right, and of course, in recent years, one of the other challenges for the UK's financial and fintech sector has been Brexit. I know you said it didn't kind of change your plans in any way in terms of whatever you were expecting to do in terms of expanding outside of the UK. But presumably, when we speak to fintechs, and banks, indeed, we've seen changes in earnings, certain things going to the continent. How detrimental was Brexit for the UK fintech and banking sector in your view?
Well, if you look at the investment in fintechs through London over the last 12, 24 months, I'd say not very detrimental seems to be the answer. So London has continued to thrive as an investment hub for fintechs. And I think what that tells you is that it's about culture, and it's about talent, and it's about a whole bunch of things other than, if you like, transcontinental connectivity. Please don't get me wrong. I am a huge fan of transcontinental connectivity at every level of society. So, but what is almost unarguable about London, I suppose, is that it continues to occupy a special place or deliver a special set of outcomes for would-be entrepreneurs, investors in fintech in particular. I think any city needs to scratch its head and try and figure out what the magic ingredients are that create that sort of ecosystem that makes it possible for investment to continue to be attracted, because it's not really been that much upset, certainly not in the fintech context, by Brexit. That's not to say anyone can be complacent in any part of the world. That's certainly not true. But right now you would look and say, plenty of reasons to be optimistic if you're sitting in London.
Okay, so look, time now for our round of rapid fire questions. Are you ready, Mark? Okay, so very, very brief answers if you could. Even one word is good. So question one, most successful kind of B2C fintechs and the like, we know are very well funded, but they often don't make much in terms of profits. Is this to be expected or something we should worry about? From your perspective, what fintech segment, aside from yours, has the biggest potential over the next 5 years?
Oh, I still think transactional banking is where there's a huge amount of opportunity to disrupt.
Aside from your segment?
And yeah, it's okay. That's aside from my segment.
Okay.
I don't do transactional banking.
Fine. Okay. What is the biggest pain point in your everyday financial life that you would like to be seen taken on or changed?
Oh, everything about financial life, it takes too long. Right? Decisions take too long, processes take too long. Buying a house is still a torture. It shouldn't be such a torture. So everything needs to be speeded up.
Okay, maybe Zillow can help flip some houses in the UK as well. Do you think we are at the beginning, middle, or end of the fintech wave?
Beginning.
Do you have a metaverse strategy?
Absolutely not.
Do you think EU and US regulations today have adapted enough to handle the new possibilities and behaviours that we are seeing in the financial industry?
No, I don't think that they've even begun to scratch the surface, because I don't think that we've really begun to understand how profoundly influenced we are by technology.
How would you describe non-fungible tokens, NFTs? A scam, B, an interesting concept, or C, part of our future that you just mustn't miss out on?
I would say they're a scam.
Have you ever invested in crypto?
I have not.
One famous member of the PayPal mafia is changing the car industry, and he's hell-bent on sending us to Mars. Do you have any out-of-this-world ambitions to become the kind of next Elon Musk or do something kind of, earth-shattering like that?
I do not.
Are physical points of sales part of the future of finance?
I missed your question. I apologize.
Are physical points of sales part of the future of finance?
Not eventually, no.
Okay. And on a scale of 1 to 10, 1 being the lowest and 10 being the highest, how would you rate the chances that in the next 10 years, one of the neobanks will be as profitable as a top-tier legacy bank?
Oh, 10.
CBDCs become a mainstream reality in the US or EU and not just in China. This is central bank digital currencies.
I think it's probably 6 or 7.
That you'll be able to open a crypto account at a top-tier bank in parallel or even instead of a normal cash account.
I hope not.
Not at Atom Bank then, I guess. That SWIFT will still be the main tool for transferring money around the world.
That remains to be seen, in particular given the disruption that we've seen earlier this year.
So out of 10, 5 out of 10?
I think maybe 6, 7 out of 10.
Okay. That a new card or non-card based challenger emerges to challenge Visa, Mastercard, Amex, UnionPay.
I think that's maybe a 2 or 3.
And finally, that we will see a top-tier bank or insurer bought by a fintech.
I think that's a 2 or 3.
Okay, well look, I'm afraid we are out of time. That was a lot of fun. So I just want to thank Atom Bank co-founder and CEO Mark Mullen for joining me today. Thank you so much.
My pleasure. Thank you.
And for those watching, we will be back again next week with another big name from the world of finance and technology. We do hope you'll join us again then. In the meantime, don't forget to subscribe to the Paris Fintech Forum YouTube channel and to follow us on Twitter at Paris Fin Forum. That's all for now. Hope to see you next time. Bye-bye.